Want my latest market insights? My latest report, Uranium Trend is En Fuego, is now available. Scan this QR code or click on the link in the description. I warned that FX volatility would seep into equity volatility. FX is currency. And I warned on Monday that we were going to have a dollar bounce, and the dollar bounce led into a funding squeeze on silver and all of that. So metals squeeze, remember the big silver spot, very, very elevated up into 50 versus your paper markets of silver and gold, SLV, GLD. That creates funding stress, and then it's a rotation to the dollar. So this is something I wanted to warn you about, which I did, obviously. Breadth weakens, dollar bounce looms. It's time for a dollar bounce. Growing macro event triggers. Fed cuts will not fix this because that seems to be the only thing the market cares about. Fed's going to cut, we're going to go higher. Well, we did in fact get a dollar bounce for darn sure. We had a big volatility move in gold and silver, which I then wrote about. But even before that, I did say, please consider this. We are right up into the resistance levels for NASDAQ 100 and NASDAQ Composite, right up into that trend line. And this is where I expect it to come back down into 583.32. What did we hit on Friday? I know, right? So did we have a reversion to the mean trade? Yes. Is that weekly support? Yes. Is it the 10-week EMA? Yes. Is it also the Keltner channel, which acts as another kind of layer of cushion? Yes. Are we having a bounce this morning? Yes. So literally right here, right then, Monday, you can see my little date here of 10/6 and my warning that we could come back down into this area. I put it on a weekly because that's how I think. I always go from the outside in. And sure enough, this was the level I gave for the daily. And this is what we needed to trigger, 607.33 to 602.50 on an intraday. So we hit it, long story short. And this is what the NASDAQ Composite looked like. Same exact trend line, resistance. And here's where we're coming. And that's what happened. It happened very quickly. It happened from Monday to Friday because we were just so ready. So all we needed was that little FX volatility, which happened to be the metals squeeze on the real market. So they're selling the futures and silver and going into a dollar because they're short. They have a funding squeeze. It's forced selling. And this is what I was looking for also, that this would turn out to be a reversion to the mean trade, like I projected a while ago with silver, where it comes back in to the 10-week and then it bases for a few weeks and then it moves higher. Now, silver obviously is a different animal, different asset class in the market, but I was trying to find a parallel for the pattern. And the pattern was saying, all right, here's another situation. We've got a weekly trend line tag. Third time is the charm. And then it pulled back. And that's exactly what I think we could be looking at now. Now it's going to be different, but I just wanted to highlight that this same pattern is what I had in my mind and it is working. So anyway, I also showed you that we had a bunch of Volmageddon hedges. Basically, breadth was breaking down. Selling under the surface was only day 2. So it had not even tagged the 8-day EMA, let alone the 21-day EMA, which by the way is what broke on Friday. And VIX is definitely intonating higher on a weekly with VXN, as I've already been tracking for weeks, making higher highs and higher lows. I also highlighted those Volmageddon hedges that started 1 week ago Monday. So I warned Monday, breadth weakens, dollar bounce looms, and then be careful because FX volatility will seep into equity volatility. And then sure enough, we also had the week before Volmageddon hedges where I said they were $50 lower. So for example, we only made it halfway to swag it, about halfway of those Volmageddon hedges. So I would not be surprised if we bounce now and then break, but that's later. So anyway, I know folks get excited about a 1987 Black Monday. It's not me. I've never predicted one. I don't see that. I see many reasons, as I've mentioned, for us to move lower. And we haven't even talked about Taiwan Semiconductor, which by the way has rare earths from China in the composition of the chips that are then sent to the United States for our entire ecosystem. So China has banned and will sanction any export of Chinese rare earths to US. And that means Taiwan Semiconductor. Has the market priced that in? Hell no. But at some point they will have to. So we got lots and lots of reasons to move lower. And these Volmageddon hedges, by the way, are only 50% there. They were out of the money hedges in the hundreds of thousands, and they are only halfway there. Anyway, I talk about unemployment rising. By the way, St. Louis Fed came in and it still has not triggered a negative. This is something that happens before the market goes into convulsions. So just keep that in mind. mind, we have not triggered before. We still have shutdown as expected. The only thing that I said on this was that if it does serve as a fiscal austerity of sorts, the bond market will like it. And you saw what happened. We had a nice bond bounce. I still think that is in play. The dollar yen is not right now, but I think it will again, but not until probably end of the year, especially if they don't hike. Fed cuts won't fix that. That's what I said. So all of that is absolutely working well. And then I went through and talked about this metal squeeze, which is really important. The dollar bounced on Q, gold and silver, big picture, time for equity volatility. And basically this, I don't think is done. This forced selling in the metals market and big picture, time for equity volatility. I gave specific levels. So we already did break 6,700 in a New York minute on Friday. And below there, I said there isn't much put support until about 6666 to 6623. We came all the way down there, paused for a little bit, but guess what? This negative gamma regime of 6654 is exactly what happened. Perfectly. Anyway, below 666, we're negative for the month. We're not there yet. It's only the 13th of October, so we'll have to keep that on watch. But anyway, it matters for reversion to the mean traders. With 6550 hit, we dropped 200 points roughly. And intraday, we dropped almost 5 percentage points in the Qs. No one's really focused on that. They're saying we're down a good 2-3% in the indices. No, from top to bottom on Friday, we were down almost 5% on Friday. And they used a Friday so they could get maximum optionality out of those folks that knew his tweet was coming about the China tariffs doubling. But this is more important. This is not done. So the squeeze in the metals market is not done. The squeeze in rare earths that also happened on Friday is not done, but that's run a lot. Anyway, we've got a lot of stress in the metals market, and it's, I believe, really like a Soros quote. When I see a bubble forming, I rush in to buy it, adding fuel to the fire. Yeah, gold and silver is a very, very, very important tell. That's why I spent so much time about that on Thursday to say, hey, we have a huge complexion change in the market now. Please, please, please pay attention to that. And then on Friday, after I had already done the Monday warning about the dollar bounce and then the metals squeeze, which is really, really important, then I got really kind of busy. So this is where it started. It has started exactly 11:02. I wrote that 3 minutes after his post came out where he was going to increase the tariffs on China of 100%. And I also said, please consider the physical PSLV from the SLV because the options market is going to get very chaotic as long as it's in backwardation. Also remember the TLT November 90 by 95 call spread. That is working. The only time I would consider bond bounce is in something like I mentioned with high employment. It's kind of a recession, knee-jerk reaction. You know I'm big picture bond bearish and I'm also dollar bearish, but I also called that dollar bounce. So I can see when they're going to be erupting, and that translates into why I time volatility. So I did warn it's time for equity volatility. And then at 11:38, risk happens fast, falling back below 99.40, gold catching a little bit, but don't be off guard. This is still SPY and Q crashing, falling oil, falling yields, falling US dollar, dollar yen. By the way, these two I do expect to be short-lived. Just keep that in mind. Anyway, we've got VIX surge 32%, VVIX obviously went right above my key danger zone. Remember, I had 113.74 on the weekly, and if it holds above that, it's very, very dangerous. So it's, in other words, we got to see where we're going to settle this week, but it should come right back inside that if you're bullish the market for a little bit more. The AI mania, it's getting blamed on, but it's actually really much bigger than that. It is the metal squeeze. The metal squeeze is what's going to cause the inflation, not an oil spike. That's my firm belief for over a year. I'm sticking with it. Now you know why I've been macro bearish. So this was an intraday post. We had only made it to 600 and 663. And then I went into reminding about where these puts are held for the Volmageddon hedges. QQQ 555. And at the time we were at 600, and SPY 610. And at the time we were at 665. So those were posted 2 weeks ago. Then I went into another one. Did you notice that SPX tagged 6623 daily support? And so let's just see if we can get down a little bit more. We did. I said, here's the VIX chart. If it gets above 22 or if it comes back inside 1929. So if it comes back inside 1929, that's where the market gets supported. Metals war, escalation on confiscation risk. Dutch government also, by the way, took over a Chinese semiconductor fabricator this weekend. Dangerous waters were going in. Anyway, China will not agree to any deal with Trump. That's my strong opinion. And so China retaliated with port charges and customs crackdown on NVIDIA chips. And then, of course, at the same time, our U.S. Senate passed the AI chip export limit. You'd think we'd be down a hell of a lot more, but nope, that's the market we're in. There's options, options, options. They're going to monetize those hedges that I talked about right here. Wait until these get monetized for the real bounce. I will say that again. I know these guys. Wait until these hedges get monetized for the real bounce. In the meantime, all of this supports my money goes home thesis. Trump does not want competition, and he's got it. For sure, for sure, China is beating us on so many levels. It's ridiculous. Besant and Trump have a major hubris, in my humble opinion, and it is China. Anyway, I talked about this, again, the quant quake leading up to that. That was mid-September, and sure enough, that's what happened. And they start selling, and then it picks up, by the way. So a little bounce is just going to be short the rip, in my humble opinion, but we're going to see how strong the bounce. He already started. I'm talking about Trump doing a little taco maneuver. Don't worry about China. But he did it in a very backhanded, insulting way to President Xi. So there's no way I believe that China's going to give in to anything that Trump asks. That's my humble opinion. Anyway, all that mechanical deleveraging is in view now. But I think Bitcoin folks are going to say, hey, maybe we're riding the wrong horse. But we're still in a money illusion. We're still in monetary illusion, all that good stuff. But metals, even if we have a little pullback in October because of volatility and funding stress on margin calls, they are still obviously the place to be. And you can see it from everything in rare earths that is US based. Even if they just have a wheelbarrow full, they now have $1 billion market cap. Does that sound familiar? Like an AI mania? And by the way, where is the government going to spend its money? In industrial things or in data center builds for AI? That's going to be the mega cap tech cash flow black hole. There's competing capital here is what I wanted to say about that. So things, and AI are going to come to a huge loggerhead. And in the meantime, this is basically the market we're in.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.